This is Closing Bell, a good day of trade today, up by 80 points on the Nifty, 270 points on the Sensex. We end this penultimate week of 2018 fairly well. But on that note, let's get in some fundamental macro cues coming in. Lata Venkatesh caught up with Sanjeev Sanyal, the principal economic advisor to the Finance Ministry, and began by asking him whether we have a difficult 2019 coming up as far as the world is concerned. She also spoke to him about RBI's rate cut trajectory, for which he said there is a big cut which is perhaps impending, made that impassionate speech for the RBI. Hear it out.
So the world, as we look forward into it, yes, certainly there are a lot of uncertainties. But on the other hand, some things have also flowed our way. For example, oil prices have come off a long way from when they peaked in October, November. If you remember, they were at 85. Now we are looking at 53. So much better. Yes, there are some apprehensions about the world economy slowing down. But on the other hand, remember, the US Fed has suggested that it will probably tighten somewhat at a pace that's somewhat less steep than had otherwise been, which, by the way, is very good for us because it means that the global liquidity conditions of anything will be somewhat easier than we had earlier anticipated. There may still be some tightening, but much easier than people had anticipated earlier. Yes, of course, trade wars make things uncertain. But again, as I said, not entirely gloomy. I mean, there are areas where if we in India, look at it positively and try and find ways in which India can, insert itself into a new global supply chain that may be emerging out of these trade wars, then in fact we can take advantage of it. So I would argue that yes, there are some challenges, but there are many areas where in fact India can take advantage of the situation, from lower energy prices, somewhat easier global interest rates, and perhaps a liquefied global supply chain where we can insert ourselves. So, and many other things as well. So I think not really such a gloomy picture of the world as maybe somebody else would have told you.
The most immediate news that we are getting is that the fiscal deficit is now 114% of the full year budget. It normally tends to be higher in the months of November, December, and gets corrected as advance taxes come in the last quarter. But nevertheless, it's a slightly higher number than we are used to as early as November. Plus, we hear that the government is planning some kind of a farm support, maybe a basic income, maybe a waiver, maybe some way of supporting farm prices. It does look like fiscal deficit is going to get much bigger than we thought.
Let me just clarify that we continue to remain very much committed to fiscal consolidation. So we are not, contemplating moving away from that commitment. As far as the farm sector is concerned, I think we need to be clear that, you see, what is the issue that the farm sector is facing? In the past, the problem used to be for drought or floods or whatever, weather-related factors, we used to be a shortage country. Now what has happened, ironically because of our own success, in fact, in increasing farm production, we have ended up in a situation where we are producing a lot more food than we could possibly consume.
Like you said, that we've got a severe food disinflation, which has actually been surprising. One thought that MSPs would perhaps increase the prices. That has not happened. And now to add to that, we also have a fuel disinflation. So what do you look at in terms of, how much rate cuts can come? We already have a fairly comfortable liquidity with the Reserve Bank promising 50,000 crore of bond purchases December, Jan, Feb and March. To add to that, how much space for rate cuts do you see in 2019?
Firstly, let me clarify that this is really the prerogative of the Monetary Policy Committee. So I can't comment on exactly how much they should cut. But I can lay out the landscape. Basically, inflation is now running at the bottom of the range that the Monetary Policy Committee had been given. And we have now, it's just not something new, we have now had for some time inflation running at or below the midpoint of that range. So inflation, I think, has structurally come off. I think it's fair to say that the old 7 or 8 to 10% range of inflation that we used to have, that has been lowered by some good 500-600 basis points. So if that is the case, we need to see a commensurate reduction in the nominal interest rates. Otherwise, you have real interest rates running about the highest in the world. I mean, small business still borrows at 12 percentage points, right? Now, if inflation is running at 2%, that's 1,000 basis point real interest rate. Clearly, 1,000 basis point, at least an 800 basis point real interest rate for large parts of the economy. This is clearly not tenable because of a variety of reasons. First of all, this is a source of enormous financial stress to the balance sheets. So this is a major problem for small business, large business, for farmers. After all, farmers can also be seen as small business, and so on. It also causes stress on our fiscal side because the government is, after all, the biggest borrower from the system. So it is a stress on the fiscal side. But also, ironically, keeping high interest rates over long periods of time also increases inflation. This is something that economists tend to forget, that while high interest rates in the medium term lowers inflation, in the long run, high interest rates mean that you do not build capacities that you would have otherwise built, whether infrastructure, in industry and so on. So you end up with higher supply side inflation in the long run if you keep interest rates high indefinitely, irrespective of where inflation is. So I think we have structurally brought down inflation. We now need to take step 2 and structurally bring down the interest rates so that they are in sync with the new level of inflation.
All right, so that's some interesting conversation coming in from the principal economic advisor to the finance ministry. But 2018, we're taking a look back at what all took place. In terms of the deals, it has been a blockbuster year for both mergers as well as acquisitions. The deal street was abuzz throughout with some very big corporate deals taking place, some of the biggest ever as well. Nisha wraps up the big deals of 2018.
Well, thanks for that. On all parameters, 2018 has been a blockbuster year for the deal street. Now, deal value crossed a whopping $100 billion, and some themes were predominant. For one, the success of deals under insolvency and bankruptcy code. So, distressed asset space alone clocked in $10 billion of deals. Consolidation in many sectors was one of the key themes, and so was global deals as well. Now, I have compiled a list of top 10 deals in no particular order, and here they are. HUL got a Horlicks boost by merging GSK Health with itself, and Unilever's push really helped it clinch the deal against Nestle. Walmart, that acquired Flipkart for a whopping $16 billion, a massive one in the new age sector of e-commerce, and marks the convergence of e-tail and retail. But our good old economy sectors are not too far behind. Kumar Mangalam Birla took the leap of faith, and also Hindalco announced the acquisition of global aluminium player Aleris for $2.5 billion, largest by an Indian conglomerate overseas in the recent times. Aditya Birla Group's Ultratech also fought a fierce battle against Dalmia Bharat to acquire Binani Cement under the NCLT process, which, remember, has changed the rules of the IBC game. Another large conglomerate, Tata Group, was not too far behind in taking advantage of buying out assets under the IBC process. So Tata Steel bought Bhushan Steel. So metal deals have been really topping the chart under the IBC process. But Tata Steel, remember, also announced the formation of joint venture with ThyssenKrupp for its European operations. So it's quite a tie for the Tatas as well as the Birlas. Now, while a lot has been spoken and expected from the financial services space, a few really fructified, and biggest amongst them was IDFC Bank and Capital First merger to create IDFC First Bank. Now, after the consolidation on the telecom sector with Idea Vodafone merger, consolidation in cable TV space was also next in line, and that came in with Reliance buying Den Networks and Hathaway Cable. Consolidation in hospital was also a very big theme after a hotly contested battle for Fortis Healthcare, which was clinched by global player IHH. Another deal came at the fag end of this year, and that is KKR-backed Radiant buying out Max Healthcare to create the third largest hospital chain in India. A good comeback, remember, for Radiant, which was also keen on Fortis, and that is the big deal. Now, for 2019, market volatility and uncertainty ahead of elections could be a dampener.
Let's talk commodities and get you a couple of trading ideas. We have with us Renisha Chenani of Monarch Net Worth Capital joining in with a couple of ideas. Renisha, thanks for joining in. Let's actually start with crude. Considering the volatility in the market, which way would you be placing your bets?
Hi, good afternoon. I think overall the commodity market is trading lackluster today, and there is not much volumes because of holiday season. But I think overall we have seen some short covering that is coming in an entire commodity space. If we talk about crude, there is a short covering that is seen after such a sharp sell-off, and as 2019 would be a year where we'll gradually see that OPEC would cut its output. So this is impacting sentiment, and prices are very much oversold. So I'm expecting a sharp recovery from here. So I would say if prices sustain above 30 to 35 at MCX, I would recommend you buy for the targets of 3,300.
Okay, all right. So that's on crude. Let's also talk about precious metals. Are you trading anything here? Because there's a lot of excitement suddenly in gold and silver, talk of risk aversion, etc. Any bets?
Yeah, I think overall 2018 here has been a bad year for precious metal pack as it did not impact and give a safe haven appeal for precious metals. But 2019 would be a year where there could be a rush to safety, and I'm expecting gold and silver prices to rise and get gains, good gains actually from here. So I would say, there's good central bank buying going on. We have overall Fed dovish outlook, and we have good investment demand for gold. So overall, it is going to impact the prices on a positive side. For intraday too, I'm expecting prices to be higher, so buying is recommended in gold, silver, both the commodities. For intraday, I would pick silver as of now. 37,700 is a level where if prices sustain above it, buying could be initiated for the targets of 38,000.
Okay, and last, a bet on copper. How do you find this commodity shaping up?
Base metals are trading lackluster as of now, but there are few concerns, like there could be a deal or a resolution to US-China trade wars in 2019, and there could be some stimulus that could come in from China, and China's growth could be revived. So these are the factors that are gradually impacting the prices and are being discounted in the prices. And as prices are very much oversold, there is a short covering that is seen. So for copper, I would say prices sustain above 420. Buying could be initiated with stop loss of 417. And we can see the targets of 425 at MCX.
Okay, Renisha, we'll leave it on that note for the day. Thank you very much. Thanks for getting us those commodity trading ideas. Well, with that, we've wrapped up the commodity market action and the equity market action. And Mangalam's already getting in weekend mood. His tie is off, so we know what that means. Closing bell recommends. What are you up to? What would you recommend this week on Mangalam?
This is the second last weekend of this year. Rather, the last weekend.
Is it the second last?
No, the second last week. Okay, sorry. So the last weekend of this year, yes. A lot for you to do, a lot for a lot of people to do, and which is why the tie is off. So the first thing that you do, get out of your offices, go to the theatre nearest, closest to you, and watch Simba. Why? Because it is Ranveer Singh in and as Simba. There are two ways to look at Rohit Shetty films. They're mad or
leave
they're
your
mad.
mind at home.
Yeah, whatever it is entertaining. And then you have this man who is, I think, a single-handed energy drink doing a film with Rohit Shetty. You got to watch it. And then there are songs, there's dance, it's full-on Bollywood masala film. You can't not watch it. Irrespective of the reviews, ask the critics to, go away, take a hike if you must. But Simba is the film that I will definitely be catching this weekend. Apart from that, I'll also be catching a lot of cricketing action. India ends this day of play with 350 runs in the lead. But if you're done watching the match in the first half of the day, and if you want to watch something more cricket-like, and if you're still home, tune in to Netflix. Now streaming is Selection Day, which is based on cricket, in fact, based on a book by Arvind Adiga. So that is something which is pretty interesting if you're a fan of the Mumbai School of Cricket. And initial reviews are okay-ish, not that great, but for compulsive watchers, might as well just do that, right? Watch Test match in the morning and watch Selection Day in the evening. A lot of music taking place all through this weekend across the country. The first one, and the one that has me most excited, is the Yoga Institute of Mumbai completing 100 years. They're celebrating it, and how? The Harmony Fest, 2 days of music, panel discussions, speaker sessions, food. There would be farmers market, food trucks, etc. And just look at the musicians. You have Prem Joshua, you have Kabir Cafe, you have Sukhwinder Singh, you have Rekha Bhardwaj, you have Indian Ocean, you have Dharavi Rocks. Mark my words, 2019 is going to be the year of Indian hip-hop. And then you have the headliner Shankar Mahadevan performing My Country, My Music. This takes place on 28th and 29th December at MMRDA grounds, BKC, Mumbai. And that is something you must catch. The entry is free. Most importantly, the entry is free, so anyone and everyone can go. But if you believe that anyone and everyone will go and there will be a lot of crowd, and if you want something cooler, your elitist scene, if you must go ahead and watch Sonam Kalra and the Sufi Gospel Project at the Quarter. I have watched this act live, and this is one of the most phenomenal acts that one can watch. Sonam Kalra and the Sufi Gospel Project at the Quarter, Mumbai on December 29th, 8 p.m. Ticket prices anywhere between $9.99 to $15.99, but that's the kind of gig that you get, and that's the kind of venue that you have. And those who heard me talk about Indian Ocean performing in Mumbai and you're feeling out of place because you're not in Mumbai, if you're in Delhi, go ahead, catch them live at the Uncultured Cafe and Bar, December 28th, which is today at 9 p.m. Catch them before they come to Bombay. And if you're in Goa partying, you do not know what else to do, and if you fancy some Bollywood music and not the Goan club music, then watch the B Fest, which is the Indian Bollywood Music Fest taking place on Baga Road, Elliott Ground. Take a look at the artists. You have Nuclear, Kailasa, Jasmine Walia, Asta Gill, Durbeen, DJ Khushi and DJ Suketu for the old times. And
good luck getting to that.
Good luck getting to that venue. Good luck being in Goa.
Of December. Really good luck.
If you're in Goa, it's good luck any which way, right? And finally, I will end with what I started. I said 2019 is the year of Indian hip-hop. If you're in Bengaluru, go watch Divine featuring Gully Gang on December 19th, 8 p.m. Fandom at Gillies Redefined Bengaluru. On that note, we shall wrap it up.
Okay, there's music, there's cricket, there are movies. It's going to be a fantastic end. And there's hip-hop. So it's going to be a fantastic... I said music, yeah. Anyway, that makes it a fantastic end to 2018. Thanks for watching Closing Bell. We will see you on the last trading day of the year on Monday. But don't go anywhere. News and action continues after the bell, coming up next.